Let's talk about the Landings Association's Restricted Capital Reserves Fund. This is not a rainy day fund. Rather, it is a fund that is only for the repair and replacement of the association's capital assets. Some of those assets include 91 miles of roads, 22 miles of paved community paths, 80 miles of storm drains, bridges, structures, equipment, and other items. Now let's look at the average annual capital reserves fund expenditures over the next 5 years. You'll see we'll be spending about $1 million each year on the roads, another $750,000 each year on bridges, structures, equipment. Storm drains comes in at about $340,000 a year. Paths and trails is interesting because we have been converting the paths and trails from asphalt to concrete, which costs a little bit more money up front, but lasts a lot longer. And when sections need to be replaced of the paths, we don't have to replace entire sections. We can just replace the failed concrete panels. In 2020, the annual dues are $1,850 a lot, and that is split between the operating fund, and that covers your staffing and services, and the restricted capital reserves fund. That's for your asset replacements and repairs. So think about if you're setting money aside to replace a roof on your house, you build that fund up over time to be able to afford that. That's what our capital reserves fund is for. And once money goes into that fund, it can only be used for the repairs and replacements of capital assets. One thing to note is that although we allocate money at the beginning of the year to operations and the reserves fund, if any excess funds are left over in the operating fund, we go ahead and transfer that into the restricted capital reserves fund. So as we look at the next 5 years with the capital replacement reserves, revenues, and expenditures, whether we have an annual dues increase or not, we're still looking at these expenses. So you see they vary by the year, and that's expected because it just depends on when you have your major projects. But if we don't have a dues increase, you see big gaps with the money coming in versus the expenditure. So 1 year we're even, but the rest of the years you see much higher expenditures than the revenue that can come in. And this is what that looks like. Over the next few years, the reserves begins running out of cash until there is almost no cash left. And what that means is there's not enough money for roads, storm drains, paths, and lagoon overflow structures. As reported at the end of last year and the beginning of this year, the Landings Association had an independent reserve specialist conduct an on-site inspection and evaluation of our thousands of capital assets and the reserve funding methodology, and we have close to $80 million in assets. There's a couple of different ways to look at what's the appropriate reserve funding. Certainly if you had 100% full funding, that's the least risk of deferred maintenance or special assessments, but there's a large required contribution. So the National Reserve Standards has an alternate way of looking at this, and it's a minimum 30% to 70% fully funded reserves for an adequate, is what they call that level of funding. So when the reserve study was complete, it determined the capital reserves fund is too low to maintain the Landings Association assets in the future, and it did recommend having at least the minimum 30% balance of the future costs. So this is the slide we saw earlier that if there are no annual dues increase, you see the reserve fund continue to drop down until we start running out of money. This shows the 30% minimum funded target based on the reserve funding recommendation, and you can see the actual funding. We go down below the 29% down to 8% in 5 years. So what does that look like for the proposed annual dues? This chart we're about to look at, make sure that we get the reserves to the 30% minimum, and it also adds in just a few service levels, restores some that we had taken out. Currently, again, each lot is paying $1,850 per year. With this proposal, that goes to $2,070 next year, then $2,170, $2,270. So it's a 3-year average of $2,170. Of note, And as of comparison, the average national annual dues per year is $2,400 to $3,600. So it is an increase, but it's still below the national average. This chart shows that while a fully funded reserves would be a much higher level, this proposal instead calls for an amount that achieves the 30% minimum funded by the end of the 3 years. We looked at a lot of different options and amounts over the years. The increase in the first year is certainly more than the second and the third year, but it's not so much to be overly burdensome and trying to achieve the full 30% in the first year.